My name is Ronnie Michael, certified public accountant, and this is the Personal Finance Playbook. Improve your finances, improve your life. The title of today's episode is Stock Index Funds Are the Best Investment. Not really a subtle title, huh? You know that you need to invest your money somewhere if you want to keep pace with inflation, let alone beat it. And if you aren't aware of this, please check out my prior video on this. But perhaps you feel overwhelmed by the world of investing. You're not alone, but here's the good news. The solution is simple. Stock index funds are going to be the best investment out there for the vast majority of people. Let me take you back to the 1970s. The dominant view in the investing world back then was that the key to success was finding the smartest stock pickers who could consistently beat the market. But John Bogle, the founder of Vanguard, which is one of the largest mutual fund companies in the world today, had a different idea. He launched the first public index fund designed to simply track the S&P 500. Bogle's revolutionary insight into investing was simple. Instead of trying to beat the market, why not just match it? Bogle was motivated by research showing that most professional fund managers couldn't consistently outperform the market. In fact, he conducted a study for his Princeton University thesis, which found that most mutual funds earned less money compared to broad stock market indices. His famous advice to investors was don't look for the needle in the haystack, just buy the haystack. So, what makes stock index funds so powerful? Let's start with the fact that the historical return for the US stock market has generally been pretty good. Between 1872 and 2024, the average annualized return on the US stock market has been around 7%, and that's inflation adjusted and with dividends reinvested. Now, what does a 7% annual return mean in practice? If at age 25 you invest $500 a month and do this for the next 40 years, you'll retire at age 65 with an investment balance of over $1.2 million. Another big benefit of stock index funds is low expense ratios. Expense ratios are the fees you pay to invest in a fund. Vanguard has an investment product called the Total Stock Market Index Fund, which goes by the ticker VTSAX or VTSAX. As the name implies, it holds essentially every publicly traded US company. The index fund charges an expense ratio of just 0.04%, not 4%, 0.04%. This means you're paying fees of only 40 cents annually for every $1,000 of your investment asset value. For $100,000 of assets, that's only $40 annually in fees. For $1 million of assets, that's only $400 annually in fees. Now, you may be thinking there must be a catch here, and there is. As discussed in my previous episode about timing the market, stocks are volatile. You do not earn a 7% return every year. One year you may earn 20%. The next year you may lose 20%. But over the long run, you'll get 7%. To think that you can dance in and out of the market and perfectly time it so that you're in the market for the good years and out of the market for the bad years is a fool's errand. Research from Morningstar shows that missing just the best 10 trading days over a 20-year period from 1997 to 2017 would drop your annual return from 7.2% to just 3.5%. And if you had missed the best 50 trading days during that time period, your return would have gone negative to negative 4.5%. The real beauty of index funds is their simplicity. You don't need to be a stock expert. You don't need to follow the market daily. You don't need to time your entries and exits into the market. You simply buy and hold, allowing the power of compounding and the growth of the overall economy to work for you. If you're just starting out, try to find a low-cost S&P 500 index fund or a total stock market index fund. Set up automatic contributions each month, reinvest your dividends, and then forget about it. Resist the urge to check your account daily or react to market fluctuations. Remember, time in the market beats timing the market. What do you think? Does this apply to your life? Leave a comment below, and thanks for watching.